Everybody. Welcome to today's webinar that is brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is Cyclical Companies, How to Ride the Wave. My name is Shen Chu. I'm the moderator for this session. So in these sessions, we're going to explore strategies for us to invest or trade companies that exhibit cyclical patterns. So the root word of cyclical is cycle. So we're going to learn how economy cycles can affect all these companies. Cyclical companies are high beta stocks that exhibit a higher volatility than the market average. So in this session, we're going to study in depth on how do we trade or invest in cyclical companies. Before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. He first indulged himself in the SME financing industry right after finishing his diploma in finance and investment in TAR UC. So he continues to pursue his interest in the finance and capital market by joining Rakuten Trade and TA Securities, which he held the position of risk and compliance officer and dealers representative. To date, he has over 7 years of experience in the capital market as an investor himself, where he also runs One to Invest, a financial blog which amassed over 60,000 followers to date. He is also the investment associate for a private equity firm, Sensuria Capital Sdn Bhd. And currently, he's also an SGX Academy speaker. So he's none other than Mr. Max Tan. So Max, how are you today?
Hi Shane, good evening everyone. I'm doing well. Hope you guys are doing well as well.
All right, cool. So we can't wait to learn from you about how do we trade or invest in cyclical companies, how we capture the wave. All right, so I'll hand over the session to you, Max.
Okay, thank you Shane so much for the kind introduction. Once again, good evening everyone.
Your
My
slide
name
seems to be
is
chopped off at the bottom part a little bit.
Bottom right.
Yeah.
So one moment, guys.
Yeah, don't know what happened.
Check. So, I
Yeah,
think it's
now
okay
it's
now.
perfect. Fantastic.
Right. Okay.
Should
Thank
be,
you,
looks
Shane,
okay.
and everyone. And thank you, Shane, for the disclaimer, especially where SC has recently had a new guideline for influencer. So hopefully whatever we share today with regards to the topic of cyclical companies, we might or might not talk about some of the specific companies in Bursa. If we do, most likely we do. Hopefully everyone understand that this is just a case study for you to understand the past performance, the share price performance, and if we were to, take a stance on this kind of cyclical companies, so how should we do it, right? So it should be a case study and should not be any form of investment advice. So Asha here, very early questions are already coming in. So if you have any questions along the webinar, feel free to throw them in, or you have any specific cyclical companies that you want to talk about, please feel free to comment below. We can all discuss it together. Hey, Suyong, good evening. So without further ado, let's kickstart the session today. Blah, blah, blah. This Shane has already talked about. So we jump right into the topics of what we're talking about today. What exactly are cyclical companies? Okay. So I put together a couple of factors that I think that are fitting for cyclical companies, right? But what do you think of cyclical companies? You can comment below. To me, they have this four, but not exclusive to this four. They usually have these four what we call characteristics. So the first one is earnings volatility. It's like a roller coaster. The earnings of this company can be very good and very bad depending on what time you are looking at them. So in some cases, this company, they might doing the best ever single quarter they are at one particular quarter. And then the next few quarters, you can see they dip into steep losses, right? Is there any actual cases that have such an issue? If you look back into COVID-19, that era, yeah, definitely. Beyond the glove industry, we also have the steel industry. They are doing exceptionally well, like Lion Industries and CSC, Southern Steel, Mars Steel. A lot of companies that are doing super well during that time. But just past the peak period, yeah, and you see a earnings volatility, where the company did not perform so well as compared to their peak, right? It's because they have a cyclical factor, which you can always tell in terms of their earnings. So how do you check on them? So try to look at the historical performance of the company, open up past 10 years performance, then you will know that whether this company is indeed cyclical or not in nature, right? And this cyclical nature or the earnings volatility is usually impacted by external factor. What do I mean by external factors? These are the factors that the company themselves, they cannot control. For example, any plantation company in Malaysia, they cannot control what CPO, crude palm oil prices, will go up tomorrow. If they can, they don't have to plant the trees. They just go ahead and play around with the CPO prices, and that's it. But so commodity prices, which is pointer number 4, index sensitive. These are the external factors that they couldn't control, right? And if it's caused by internal factors, right, which cause the company to be cyclical in earnings, what do I mean by internal factors? These are the factors that when the industry is doing very well, but they're not doing so well. So this is something wrong with the company itself. They might have some policy or their business model is slightly different than their peers. So that is where this is caused by an internal factor. But generally speaking, cyclical companies, they are usually impacted by external factors, right? So to make the session more interactive, you can put into the comment box what cyclical sector that comes to your mind when we talk about the earnings volatility, right? And for cyclical company, they are actually very, very sensitive to the economic conditions, right? What I mean by economic conditions, we'll discuss in depth later. If you are a finance student, probably go back to finance. We are going back to finance 101. But basically, a good economy and a bad economy, we will make up a huge difference for these earnings and also the performance of these cyclical companies. Of course, there are also some extreme cases where the trend reversal, right? The price is going up. Let's say the CPO prices is going up, but the plantation company prices is going down. There are some cases as such, but only in very extreme cases, right? And for the next 2 slides, I think next 1 or 2 slides, we talk about economic conditions later on, right? And another one, I see a question in the comment box is saying that, beyond Malaysia, Max, what kind of sectors that are cyclical in nature, which is what we are going to talk about. It's probably not going to be in a slide, but I put just a single phrase, which is consumer discretionary. So consumer discretionary is not like consumer staple. Consumer staple is companies like Hub Seng, Dutch Lady, Farm Fresh, right? Economy bad or worse, you still need to consume their product, like Nestle, right? Ajinomoto. So these companies, when the economy is bad, probably you consume lesser, right? And then you will clearly differentiate between your wants and your needs in between. So consumer staple is considered needs, where you need them for day-to-day living. Okay, Padini is a very interesting case. You can consider it's a need or consider it's a want, depending on how do you position them. But consumer discretionary in this case, in our context, is probably more towards wants. That means that in very good times, like everyone got extra cash, for example, EPF country or the market bull run, then crypto is running super well, then a lot of people have a good spending power, then they will go towards, one of the sector that we go towards is consumer discretionary, right? People will go and buy gemstones, watches, luxury cars, houses. So the economy seemingly is booming, but there's still a cycle to it. So for example, how do we know consumer discretionary is doing good? Looking back into COVID-19, right? A lot of people have good spending power. In 2022, you can see a lot of what we call revenge spending, where in 2020 and 2021, people cannot go out, so they cannot spend their money unless they are buying online. So when our government opens up the opportunity to go and shop, then a lot of people go for shopping. So there's a spike in terms of demand, especially for luxury goods. If you're looking into the watch industry, if you love watches, then you know that is a crazy year for watches. Okay, but coming into 2024, since it's cyclical in nature, the demand has already normalized. So demand and supplies is also one of the key factor that we'll be talking today in the later slide, right? So to summarize it, liquidity and also spending power. Spending power is depending on economic condition, and liquidity somewhat also related, but is also very closely related to some of the changes in government policy. So for example, in US, they used to give a lot of subsidy or cash to help out people that are suffering. And then in Malaysia, we now have an EPF account tree. So if I'm not mistaken, up until June 2024, we already withdraw approximately 7 billion out of the EPF account tree to whatever we are going to spend it on, whether for investment, for savings to buy your first house, first car, or for trip, for vacation, right? So a lot of factors, governmental factors that can impact liquidity-wise, and spending power, economic condition. So these two, it will impact greatly on the economy, potentially leading to inflation. So imagine everyone have the cash and everyone want to buy the same watches, right? Luxury watches. So that will lead to the prices of the watches to increase, because if I sell higher, still there are people willing to buy, and they are bidding outside of retail selling, right? So there's a very great demand and supply. And this factor itself would impact the performance of a lot of companies, right? But these are fundamental factors. Whatever we talk about, these are fundamental factors that impact the prospects, the earnings of the company. But most of the time, cyclical companies, their share price, realistically speaking, we are still looking into capital gain. Most of the time, we are looking into capital gain when we are investing or trading on cyclical stocks. Most of the time, whenever an index had reflected the changes in terms of the demand and supply, the share price will go up or down. For example, Plantation company, right? Imagine when CPO prices now, I think it's around 3,008 per metric ton, according to MPOB website. Imagine it spike up back to 6,000. So you see, even though you haven't seen any earnings coming in for plantation companies, right? Because in Malaysia, our law is for every 3 quarters, you have to wait for another 2 months for their quarterly result to come out, and 4 months for annual report. So there's a delay factor in between. So usually share price would move first, right? So when you are going into this kind of companies, be careful with this particular sector. And another sector that probably it's not in the slide, but I think it's quite good if we're going to talk about it, which is the gold-related companies, Tome, Pokong, and Evergreen Max Cash, and the newly listed Wellchip, which is the Value Max Pajak. So these companies, they are also dealing with gold, right? Whenever gold price, very interesting. This is an example beyond what I plan to talk about. But since we're talking about gold, not only Pokong and Tome, those retailer, they will be benefited. But for the Pajak companies, they might also experience good business, because when they go and pledge, let's say if I go and pledge the gold during gold price is strong, they might see more business coming in, right? And vice versa. Whenever gold price is seeing a drop, they will see 2 things coming on for Pajak. Number one, they might see higher default rate, because when the price drop, so they might think that, okay, if I get a collateral value of 90%, now the gold price dropped 10%. So net, I also didn't lose anything, right? I already got the money, and for 6 months, I already earned the interest in between. So meaning that I didn't pay the interest in between of, let's say, 2% per month. So net 12%. So a bit of complex calculation, but during that period, Pajak, they might see people go for default, right? And also their gold business, when gold price is not so nice, so people tend not to buy. We'll also talk about this contrarian mindset by the end of the webinar today on buying gold during the prices is low and then selling during high is exactly the same in the stock market. Okay, so that's basically some of the 4 factors that how I would categorize them at a cyclical company. Okay, so welcome back to Economy 101. And if you are economical students or you're a finance student, probably you still remember this chart. If you don't worry. After a year from graduation from my college, I given everything back to my lecturer, right? But anyway, in real world business or understanding cyclical company, I think it's still important that we go and understand each phases of the economical cycle and also business cycle, right? As you all know, the world of business is like the stock market. The environment is not perfect. It's not something perfect. It's not that this company is earning good and their share price will go up. It's not that straightforward. If it's that straightforward, then there is no excitement in the stock market, right? And there will never be a straight line also in the business world. So for example, if you look at this chart, you can see that there's a middle dotted line saying that average. This is how the economy should be like, which is slowly going up. But in reality, you will see that there are couple of phases. You see contraction, which is recession, and then you see business peak, and another recession coming in, then another boom going back up. So yeah, this is how the economy should look like, right? But to be frank, there are also extreme cases like the Great Depression, which when I mean depression, it means that for 3 consecutive years, a country's GDP has been declining for 10%, which is very, very drastic. That's what we call depression. I think the people living in that country also get depressed if I were to see my country's GDP decline by 10% every year. Don't have to look at the currency. It's going to be bad. But fortunately, we just escaped an depression actually. So during again, we're going to talk about COVID because I think more relatable. I don't know how many experienced people here, but to me, it's very relatable when I talk about COVID era. So during COVID era, a lot of businesses, they are forced to shut down. When they're forced to shut down, a lot of business, they couldn't run, they couldn't generate income. So there's a lot of spillover effect. Imagine when a factory, they have 500 people, the factory shut down. Number one, the factory couldn't generate revenue, loss of income for the government in terms of income tax. 500 people, they couldn't get paid, depending on how many people they got retrenched or how many people lost their job or how many people they are forced to do something else. So a very huge impact onto the economy. But then fortunately, or should I say fortunately, but I don't think fortunately is the right word, but luckily a lot of different government, we have a lot of policies to help the people, but they have a lingering effect. For example, in US, which is quite bad in terms of their debt level, which is a time boom, you can call it. So they are helping out the economy to bring them out of recession very quickly, which causes the issue here, which is the uncontrolled inflation in US, right? So everything comes with a price, and the price for us to forcefully move out from having the risk of going into depression is we have to deal with the significant inflation now. Fortunately, living in Malaysia, yes, ringgit is not so strong against US dollar, but if you look at regional wise, compare with other Asian countries, ringgit is actually doing quite well. And if you look at our GDP this year, we are doing quite well. First quarter, our Malaysia GDP, we increased by 4.2%, which is quite in line with our target of 4 to 5% this year. But that one is very macro basis, right? What I'm trying to say here is that for every business, there are impact of the economy to it, and the economy never move in a straight line. So you need to understand how the economy works and how the business work in order to capture the wave itself, right? So diving deeper into how economy can impact cyclical companies. Okay, so number one, biggest factor would be demand and supply fluctuation. This is the most origin form of impact onto cyclical companies. And if you're bored about the COVID-19 example, let me give you another more recent example, which is the Red Sea incident. Red Sea incident is very unfortunate, causes a lot of attacks on vessels. Vessels are those ships that are carrying the container from point A to point B. So the freight rate, because of the cost of operating is higher, is increasing, a spike. For certain routes, for example, from certain areas to the United States, probably we have seen an increase of up to 20,000. And during COVID times, it's 30,000. On normalized basis, it's somewhere around 5,000 US dollar per 40-footer container. So there's a very drastic increase in this time. Why is that so? Because of the Red Sea incident, which there are some attacks on the vessel, then there are lesser sea freight operators that are willing to go through the route. So they are reducing the supply in nature, but the demand remain constant, right? So these companies, they are either taking the risk to go through, which they need to be insured. When they need to be insured, the cost of operating is higher, and they need to transfer the cost to their clients, right? This is a point where inflation comes in, so we'll talk about it later. Or alternatively, these players, they could choose to go to another route. But when they're going to another route, obviously that is not the optimal route. Maybe it's further. Maybe this is the route used by other players or other countries, right? So when they're using other routes, they might have to, fight with other vessels to take the route. So it causes a longer time for a product to get delivered as compared to before the incident itself. Okay, so this will also cause a congestion. Now you see a lot of news talking about the port congestion. This also impacted the supply. Okay, demand remains constant, but the supply has been impacted. So because of this issue is persist, right, is here. So a lot of business owners, they are afraid that if I were to order late, then I might get my product late, right? So I might as well, I order much earlier. Maybe initially I forecast to have my raw material delivered to me, probably in advance of 6 months. Now I'm changing my strategy. I'm going to order raw material in advance of 9 months or 12 months. There are incidents where we see some Malaysian companies, they are doing this. They are ordering their raw material earlier, and you will see that this indirectly causes a demand to increase, right? When there's a demand of increase to this factor itself, right, more demand to it, you will see that the price of that service increase, which is sea freight. Basically, sea freight is very simple. Sea transportation is just another term to it. But for any companies that are related with port, with container, with sea logistic, you can see that these companies, they are likely to be benefited because of this economical factor, which impacted the demand and supply, right? Which also leads to the pricing sensitivity. I should talk about this first, but anyway, pricing sensitivity is a factor that when when demand is higher, so the price is also higher, right? And price is something very sensitive that it goes transfer down the route unless you sign a contract. Otherwise, normally the transfer of the pricing usually goes to who? Us as the consumer. I give you an example. The announcement of the removal of diesel subsidy. Suddenly, you see Kopitiam or Mama, they will increase their prices, although they are not related one. This is because the cost of purchasing raw materials like coffee bean, cooking oil, or whatever raw material they are consuming might have been increased due to the logistic costs, right? Because if I were to transfer from the coffee bean factory to my Mama or to my Kopitiam, the price is higher now, so I have to transfer the cost. So the price will increase, which at a certain point, back to the economical factor, at a certain point when the price is too high, people find it not logical, too expensive, they will seek alternative. They will look for, is there anything else I can replace whatever I'm buying now? Or even worse, they will stop consuming it until the price going back down, right? Then you can see that previously, because of this factor, boom, because pricing is going up, and these companies that are doing sea freight or whatnot, they are spending power. But at some point, when the price is too high, when the inflation is worsened too badly, then people slow down their spending and it goes down in a cycle. So there's a cyclical in nature as well. Okay, then whenever an economy slow down, I don't know why I keep mentioning economical, but whenever an economy slow down, so those who have most water, in Chinese we call money, right? They will start to tighten their belt whenever the economy is not doing so good, which are banks. So when an economy is doing bad, the banks will have a higher default rate, meaning that they could not collect the debts that the money that they lended out, right? The risk for them is higher. So they will be relatively more careful in terms of lending more money in the future. Then for companies, access to credit will increase, which is financing over here. So number one, either they couldn't get financing. Number two, either their cost of financing is higher. Again, when the cost of financing is higher, the overall operating cost for a company will increase. So at some point, they might force to increase their prices, which worsen the situation even more, right? So the whole economy cycle is something really, really complex. But we are trying to simplify and dumb it down here so that we can understand how the nature of it could impact the cyclical companies. So some of the companies that will be impacted because of the investment and capex expenditure. So what do I mean by this? Investment and capital expenditure is purchasing machinery, buying new land, buying new properties for my expansion. When the economy is not doing good, like bank is not lending so much, people will slow down in terms of investment and capital expenditure. For example, semiconductor sector in end of 2022 towards early of 2024. So this, a lot of people are talking about technology companies, are they cyclical in nature? Generally speaking, technology is something that keep having an advancement, but semiconductor, yes, they have a cyclical nature, but it is typically anywhere around 12 months plus, usually won't be too long, right? When the manufacturers of chips, they have too much supply or they have too much inventory on hand, then they will slow down in terms of their production. So in semiconductor sector wise, if you look into Malaysia context, you'll notice that during COVID times, a lot of people already purchased electronic products. And consumer electronic products is easily one of the largest electronics consumed sector in the world. So you can imagine that with lower demand, so that the companies that are making these consumer electronic devices, they will also slow down in terms of their spending, in terms of their expansion plans, especially on spending of expanding their capacity and whatnot, right? So this has impacted the value chain behind. So imagine Apple, they're slowing down their manufacturing, the production volume of their iPhone. So Broadcom, the one manufacturing chips, they will get impacted. Hong Hai, the company that is doing EMS for them, assembly and whatnot, also got impacted. Then the companies in Malaysia doing machinery for testing of the chips, testing on the functionality, they are also impacted in that sense. So bringing into the sector, which I think we'll talk about capex in our next slide, next one or two slide, which is the oil and gas sector, right? We'll talk more about this investment and capex concept during economy bad and economic bad, good times, right? So this is one of the more interesting sector in Malaysia that is highly cyclical in nature, which is oil and gas. Quite obvious. A lot of you are probably quite familiar with oil and gas industry. According to MIDA, the oil and gas industry contributed around 20 oil and gas or oil and gas related products as a whole contributed around 20% to our GDP in 2022, if I'm not mistaken. So try to think back the first few slides we had, right? The nature of the cyclical company. So how do they look like? They have a dependency on oil price, they have earnings volatility, right? Which over this slide here, you can see that they are dependent on oil price, especially for upstream player. Okay, what do I mean by upstream player? Upstream player are like Petronas Carigali, Repsol, Hibiscus, which is Pink Petroleum, Petra Energy, ExxonMobil, and Sapura. So what they do is they go and explore and they go and drill for oil and gas, right? These are upstream player. So the product they sell is effectively the oil and gas. Imagine if oil price going up, it's going to be very good for them. But when oil price is coming down, let's say crude oil price is coming back to $60 per barrel. or 50 even, then these companies, some of them might not even break even. Okay, they might go into losses. This is where the earnings volatility come in for this kind of companies, right? Not saying they're not good, but depending on timing and depending on what the price that you bought in for this kind of company. Then for oil and gas industry, it's very capex intensive. It's not cheap to build an oil rig or a midstream. Midstream is where transportation and storage of oil or processing of oil, mild processing of oil happens, right? Companies like T7 Global, Yinsen, Bumi Armada, there are much more. Dialog. So a lot of companies, they are doing the midstream, right? So to build this tanker, to build this, we call it FPSO, which is a floating storage and production device, right? That is floating on the sea. These companies, they require a lot of money to build this kind of vessel. For example, another company just got listed not too long ago, Keyfield. Keyfield, you can understand them as they are operating as a hotel on the sea, right? Because oil rig effectively is not safe for people to stay over there for a long time. So they will have a vessel, or they call it AWB, accommodated boat, for them to move the workers from the oil rig or the FPSO to the AWB for them to stay on, right? So AWB, I would categorize it as a service industry for the oil and gas sector, right? It's a service industry to the oil and gas sector, which is also dependent on oil price. So imagine that when oil price is low, then the oil rig is not so active, right? In that sense, the demand for Keyfield services of Keyfield, and not only Keyfield, the peers of Keyfield could be lower. So it impact the charter rate for them also, right? Because their rate is also floating in a sense. So oil and gas or oil and gas related industry in by nature is quite cyclical, capex intensive, because to build a boat or build a downstream processing factory, which is we take the oil, we have a processing process. Sorry. Sorry, a bit disconnected. They have a processing facility like Lotte Chemical. It costs hundreds of millions and also up to billions to construct it, to do whatever we call the raw material of plastic, and also naphtha, right? Raw material plastic. So they need a lot of money for this industry, and it's to investor. Whenever a company they take money to invest, is also a risk rather than paying dividend. So we need to be careful when we're looking into oil and gas industry. And oil and gas industry, due to the high capex nature, their cash flow is usually very intensive. In good times, their cash flow should be super good. But whenever the oil price down, or some of the service provider for, let's say Dayang, when they couldn't secure contract, then the maintenance cost for whatever vessel that they have is going to be very high. So oil and gas sector as a whole, we'll talk about the strategy to play around with oil and gas stock later on. So yeah, this is basically talking about the cyclical sector, oil and gas sector. And next one is going to be more closer to us. We might consume palm oil on daily basis, not direct palm oil, but processed palm oil, RBD all-in palm oil. Palm oil, if you look at the plantation companies, interestingly, majority of plantation companies that are listed in Bursa Malaysia, they are doing palm oil plantation. There are very rarely that they have vegetable plantation. Now we are seeing durian plantation, and MFCB, Mega First, another company, they are doing something else, some kind of different kind of plantation. But generally speaking, in Malaysia, when we talk about plantation sector, is usually talking about palm oil, right? So palm oil, from the process of planting to become the oil that we purchase, like the control price oil 1 kg pack, poly bag, RM2.50 for 1 kilo. From the whole process, there are 3 key elements. Number one, whenever they plant the trees, they harvest something called FFB, fresh fruit bunch. So basically, it's the fruit for this oil palm. Then they will further process it into CPO, which is the palm oil, oil in nature, and also the core of it, which is palm kernel. palm kernel can also be extracted into oil, but that one is a bit far-fetched. Anyway, CPO, palm kernel, or FFB, all are dependent on CPO prices. Okay. This sector itself, if you look into when CPO prices went up to, I think, 7,000, 8,000 in COVID-19, these companies, they are performing super well. So most of you would have expected like, oh, now we are seeing cyclical, right? They should have normalized back to, for some years, CPO prices has been hovering around 2,000, 3,000. So a lot of companies, they are making losses at the time. But now, interestingly, because of the El Nino weather effect, which caused the yield, meaning that harvestation or the results from planting these palm oil trees, the result is not so good. So again, linking back to the economy cycle, the supply is lower, but the demand remains constant, right? So the CPO prices, we are maintaining around 3,008 per metric ton now, right? And is the industry capex intensive? Yes. Normally, cyclical, they are very capex intensive, right? To start a plantation business, especially for palm oil, not only that you need a lot of certification, but to get a land bank or to get the right of using a land bank, parcel of land bank, it's also not easy, right? You need a lot of money. Then you need to buy the seed and you need to wait 3 years before you get any harvestation. So for that period, you need to wait. And if you're talking about replanting is okay because you have existing palm oil trees that are producing food for you, that you can change into cash flow, right? But for new trees, for new planters, it's actually very capex intensive. But comparatively with oil and gas company, normally plantation sector, above 2,005 or 3,000 CPO per metric ton, they will have a very good, decent, I wouldn't say very good, super good, decent cash flow and also dividend. Okay. So if you look at some of the top plantation companies in Malaysia, they are actually doing quite well. And there are very, very few cases that regardless of what price the CPO is, they are still making profit. Okay. If you have the time, we're probably going to talk about this company, but bear in mind that it will not be a buy and sell call. That company is quite unique in a sense. Okay. Then the third sector that we're going to discuss is the steel industry. Steel itself, again, if you look at the past 2 slides, they are dependent on something, which is the reliance on index. The few slides before that we mentioned, okay, which is the steel prices. So imagine that steel prices going up, then steel companies in Malaysia is doing good, but only to a certain extent, because if the steel prices is too high, construction companies, which is the second point, a lot of steel, they are usually being used for building machinery or used in the construction sector. So in a sense, steel companies in Malaysia, they are also end user reliant, which is correlated to the construction sector. If the construction sector is doing well, a lot of projects are coming in, then the demand for steel will also increase. So the local steel billet or steel rod or the completed product, they are able to command a better price. So hence a better earnings for them. But normally they're also cyclical in nature. So for example, the company we mentioned just now, light industry, they have a very good profit previously during the high of steel price. But recently, I think they are into rate. Okay. So cash flow wise, it's very interesting. It's very subjective to the value chain. If you are a processing company, that means that you buy in hot roll or cold roll steel, and then you process it into something else, then your cash flow might be better, right? But if you are doing pure trading, then you have a risk of your inventory getting stuck. So for me, trading in the steel industry is basically running a loan business. So you're just loaning out the inventories to the construction companies, to your clients, in exchange for a certain level of margin, because the margin for trading is very low, around 2 to 3% for steel companies. So they have to do something out there. Normally, they will engage into manufacturing steel plate or steel pipes, which can command a better margin because they already have the raw material. They only need to buy a machine and then roll it into steel pipe and whatnot, right? So comparatively, cash flow wise is very subjective to which value chain you are in. In Malaysia, I don't think we have upstream companies that are harvesting iron ore. I don't think we have, even though we have, it's not listed, right? So normally we are buying iron ore from outside. So if you want to look at the steel industry, look at the steel price in China, because they are one of the largest producer, and the policies to control the dumping, right? If China, they're doing a lot of construction work, the consumption in their country is going to be higher. Then for them, the steel manufacturers to dump into other countries, for example, US, Malaysia, or even Mexico, the chances are lower, right? So local companies, they have a chance to perform better, comparatively speaking. Okay, so this is the illustration for the steel industry. Okay, and now moving into the strategies of investing into cyclical companies. I believe we have understand the economy, the cycle, and also some examples for you to have a deeper understanding, and some samples of the sector, some samples of the company, so you can imagine better how would they work. Okay, so coming into here, actually the key factors that will impact the cyclical companies is boil down to three things, okay, in my opinion. Number one, it depends on how well you understand on the macroeconomy and also the company. So I haven't seen any requests for sector yet. Let me see. Okay. Yeah, I haven't seen any example companies or example sector that you guys would like to understand. But in short, it really depends on what kind of sector that you are investing into, right? And also the macroeconomy. So let me give you an example. Let's talk about the plantation sector. Okay, Malaysia, we are the second largest palm oil planter in the world. In our neighbor Indonesia is number one. Okay, so our competition is not only limited to palm oil, right? It's also affected by some of the things like soybean oil. Soybean oil production in the world, the volume is very, very close to CPO, which is our palm oil. And you know, Europe and USA, not that I want to be biased or whatnot, but I believe there are restrictions on buying palm oil. They have their own agenda because effectively they are the largest producer for a substitute product, right? Naturally, they want to lower the price, then they can sell well on soybean. But of course, in terms of deforestation wise, palm oil also have some issues to be resolved in Malaysia. Okay, so if you were to invest in a whatever plantation company in Malaysia, okay, then you need to look at what are the prices of palm oil is doing now, and what is the substitute prices is performing. Is it performing well for the substitute prices? For example, the soybean oil, which is the most common substitute, or palm oil itself, or you can look at sunflower oil. Not too big of a market, but it's something trendy now because people want healthier substitute. And olive oil, you can see whether there's a health trend towards it. But if you look at the company, you're trying to understand what they do. If they're only selling CPO, okay, then especially when you see, apart from selling their own processed CPO and also palm kernel, if they are also buying FFB from other places, that means that their own plantation is not sufficient to supply the demand, which is good for the company, right? But if you see they sell a lot of raw FFB, that means that even though they process into CPO or process into palm kernel, probably it's not going to fetch a very good price, right? So these are some of the things that you should look at. Understanding on the macro, how does the global consumption pattern like? Is there any significant event that will become a roadblock for people to purchase palm oil for consumption? In Malaysia, interestingly, a side topic, one company called Sicheng, they are repackaging the RBD palm oil. Basically, it's something that is reprocessed, it's cleaner, and can be consumed. They are doing packaging and also distribution in Malaysia. Very interesting company. It's considered a downstream for the CPO. So you also, when you're investing in this company, it's a bit different. Although it's also palm oil related, you need to consider what are the government subsidy for 1 kg package. Okay, it's called COSS. So government have some certain subsidy for them, then you know that, oh, this is a control price product. So it depends on what kind of quota they can get from government. Then you need to see what kind of expansion plan that they have. Okay, so you have to look at the macro, look at the company itself. Let me see. Okay, ESG, let me answer that in the Q&A session later on. Let me wrap up the discussion for the cyclical companies. Then number one factor, again, recap, is understanding on the macro and also the micro, which is the company itself. Then another factor, the second factor, is the valuation. Okay, a lot of times when we look into some cyclical companies, example oil and gas, example steel companies, example plantation companies, okay, or example gold retail companies, a lot of times they will have a single digit PE. Conventional textbook valuation method, we're using PE, then we know that the lower the PE, the cheaper we buy the company, or the cheaper we invest in a company, the faster our payback period. But if you have the whatever tool that you have, try to look at the average PE for these companies, right? Whenever the company cyclical company have low PE, they tend to stay for quite some time before they spike up, right? Then there goes your investment period, because if you are putting into a cyclical company that doesn't pay any form of dividend, so time is also cost, right? So don't chase after a low valuation company just because, oh, it's so cheap, right? I just buy and wait. But then timing is also very important, okay? Timing is the third factor we should talk about later on. But valuation, try to be careful with it. Whenever you see too low of a valuation, you need to understand that whatever PE valuation you see now is in the past, right? PE is made up of past 4 quarters result, which is already happened. The share price can come down, which lower down the PE and increase the dividend yield. But then the earnings in the upcoming quarter, okay, might not be performing. Then it doesn't matter how good how low your PE is, the share price is still going to be going down, right? So link back to the first point that we mentioned, understand the macro and also the company to try to predict how are they going to perform going forward, right? Then you look into the valuation, whether is it making sense? Because if you look into the COVID era, we can see the hundreds, 200s in terms of PE for glove company. Glove is also somewhat cyclical in nature. Whenever there's too much, many years ago, actually, the glove industry, they have a consolidation period. What do I mean by consolidation period is there are too many players, around 200 companies, then they consolidate less than 70 companies at the end. A lot of smaller players, either they shut down or they sell their company off, which is happening now in the glove industry in Malaysia. So imagine if you buy the company, let's say, I don't want to name the company because too sensitive, but imagine if you buy a particular glove company at a peak at 100 something PE or 200 something PE. So what is your payback period like, right? Are you buying at the peak, again, the economical peak of the industry? So that is the valuation part. And also timing. Timing is something that is very hard to be taught, or is something, I would say something cannot be taught. It very depending on the valuation you bought. Although it's the cheaper, the better, but don't buy because now it's, let's say, trading at 5 times, but you know result is coming down. So you can wait, right? It's a timing issue. The more you understand about the macro and the company, the more you are able to wait for better timing. If you buy at the correct timing, so your period of waiting will be shorter. I know a lot of you will ask me, how do I maximize on this timing thing? It also comes with luck, right? But there are some factors that you can see. You try to look at CBO prices when they go down to a certain level, about 2 or 3 years, or maybe maximum 3 years plus, they tend to rebound. So if you're buying at the lowest, your chance of losing money going even further is quite low, right? And if you're buying at that timing, your waiting period is relatively lower as compared to you trying to buy and then you get, if you buy a good company, probably you get Price, United Plantation, probably you get 6-7% dividend yield, right? That one, okay, if you're okay with that kind of return, then okay lah, because your purpose is I get dividend while waiting for the cyclical nature to come back. then I capitalize on the capital gain. Then okay, you know what you're doing. But if you're buying in, then you see the share price slowly coming down a bit, flat. Then you're waiting, but you don't know how long you need to wait. Then that one is a bit of I would say you don't know the timing of investing in a company, right? So make sure you understand macro and a company. You understand the valuation of the company is on the past, it's never on the forward unless you're using a forecast, which is super hard to do in cyclical companies because you don't know next month maybe silver prices they go down to 2005 or it could go up to 5,000. You never know, right? It's very hard to predict. It's very timing dependent. It's very time sensitive for these kind of companies. Okay, so these are the three factors and to strategies to invest in cyclical companies. And we talk about economical, we give some examples. So we'll look at the chat box now, see any case study to look at it. Okay. Okay, I see a lot of comment here. There are tech, oil and gas, and also plantation. Okay, high replanting costs. Maybe talk a bit about the technology sector. We talk about oil and gas, we talk about plantation. We also discuss a bit about the transportation industry, but tech, I think we just roughly touch on it. So the Malaysia, we are quite proud to be the 7th largest OSAT outsourced assembly and test companies. We are the 7th largest in the world, which is quite proud of it. Majority of them is coming from the Penang, which is the northern region, right? So for the semiconductor part, it's also cyclical in nature, like I mentioned just now. If you look into the consumption pattern, like VSTech, Infotech, and also VSTech, Infotech, SNS, if you look into their financial performance, they have been quiet for past 2 years. And if you compare it for that period, for the global digital products, consumer digital product sales, you see a correlation there. But of course, now the significant rebound, apart from a rebound in terms of demand for consumer products, whether it's commercial use or whether it's consumer use, there's a key factor there because of data center, right? Next question is data center, is it something cyclical? I would say it's not cyclical, but it's contractual in nature. So it's like construction. After they build the data center, right? A lot of companies in Malaysia, we are partnering. We are getting projects to build data center, or we are getting projects to build cooling system for data center. There are a lot of companies from outside Malaysia that they own the data center themselves, right? So there's no recurring, not too much of recurring nature unless maintenance, operating costs, renewable energy and whatnot factors, okay? For the construction companies or the project management company, for data centers. So there's not much of a recurring in nature. Same as construction sector, right? Construction sector is project by project basis. If I finish up X amount of project, I couldn't get renewal because of whatever factor, because I have financial issue. For example, one company in Malaysia, they got quite badly hit by one single project because they put too much money into it. I think we got PN17 and close to delisting, right? Even though change a couple of change a couple of new owners for that company. So construction sector is more contractual. And if you want to talk about cyclical, yes, in terms of sentiment. For example, when the budget 2024, we talk about 90 billion capital expenditure for Malaysia. Then a lot of high sentiment plus the data center sentiment. A lot of sentiment will come into play. Then the share price for these companies will perform relatively well. But if you're talking about the fundamental of it, you still need to study who get substantial contract and whatnot, right? Whether this company, even though a lot of projects like Pen Borneo, then Sarawak have North Coastal, and we have HSR, then we have ECRL, then we also have potential MRT3. A lot of projects are coming up, but who are actually the winners, right? So yeah, that's the technology sector and also the construction sector. So I see a discussion about property sector. Is it a cyclical sector? This is an interesting question. Now, property, we can be segmented into a couple of subsector: residential property, commercial property, and also industrial property and data center. But data center we discussed already, not going to discuss about it. Malaysia, I think we have close to 100 listed companies that are having the property type. That means that the company they are doing property itself, right? So property sector, if you talk about residential, then it depends on the supply and demand. It's something very special. They have a baseline requirement, but you wouldn't see a super high spike. After 2014, for those of you who have experienced the 2014, our government has cancelled a policy, I forgot the name, but the policy is something that during the construction period, yeah, I think it's DIBS. So during the construction period, you don't have to pay interest, right? So if you take the loan now, during the construction period, you have to pay the loan. So imagine, you have to pay the interest. So you can imagine prior to 2014, prior to the ban of that particular government's policy, how many people go and flip? Because if I buying at a discount, right? Developer, they mark up, then you get a 90% loan, which is zero down payment. And when the property market is doing so well, probably it's going to increase by another 10%, 20% in terms of the property price. Then people go and flip because I have no cost incurred during that time, right? I have to bear zero interest. So my commitment is effectively zero at the time, right? Prior to 2014, property sector is booming, but that one is artificial demand. People are buying to flip, they are not buying to stay. But coming past 2014 and coming into now, you can see that our overhang issue is still quite persistent, right? And if you really think about it, what are the factors that could really spike demand for buying a residential property? I don't see a lot of factors that could support that. Maybe there's a persistent demand because people still need houses to stay, or eventually they need to switch houses, right? Eventually, 5 years, you're moving to a new house and whatnot. So this is one of the factors that could impact the property. It's not really cyclical in nature. I would say it's quite flattish already. Only some of the areas of growth, I would say, is number one, super good developers that have proven themselves year-on-year growth. Who are they? Like, for example, like Matrix. Matrix, they are doing quite hybrid. They are doing affordable housing in Malacca, Johor region, and they're also doing plastic packaging. That one is Cytex. Matrix is doing affordable housing. They are doing very, very well, and they are giving 8% dividend yield every year, right? So these kind of companies, they are able to prove they are growing even though in a quite flattish kind of environment. Then these kind of companies are some companies that you should look at. But other than that, I don't think that the property sector is cyclical in nature. If you talk about interest rate up and down, to be honest, even though interest rate increased by another 1%, I don't think youngster like me, I will say, okay, I wait another 3 years and go and buy a house. I normally would. If my income allows, I will still buy a house, right? Even though the interest is slightly higher, okay, because we have 35 years of paying back period. And one last question before one last sector before we really move into the Q&A session is the airline sector. Is it cyclical? Okay, airline sector, is it cyclical in nature? I think it's more event-based. For example, like during Touchwood, hopefully won't have anything else. SARS, during COVID-19, then you see slump. And when the slump is not normal kind of slump, it will really kill the company. Almost brought down a lot of airline in the world. Fortunately, our Asia is still able to tahan, right? And what are the other factors that could potentially impact the demand for the airline industry? Number one is the economic outlook. If the economy is really, really bad, then people tend to travel lesser. Okay, so the performance of their seat load factor, meaning that I have 100 seats, how many seats I'm going to fill up for each flight on average basis will be lower, relatively speaking, right? So it's quite correlated to the economy itself. And also another factor that could impact them is the oil prices, because jet fuel itself is very expensive and it is a major cost component for airline operators. So if touch wood, if any issue happen on someone commented OPEC, in any drastic issue happening in the Middle East that could cause them to reduce the supply significantly, the price spike up, then a lot of airline operators, their cost of operating will increase. Then there goes their lower profit. So in certain extent, yes, they are somewhat correlated to the economical sector, and they are also quite correlated to the oil price itself. Yeah. Okay. So yep, thank you everyone for your kind comments. I see a lot of interesting comments here, and also quite a number of Q&A here. So yeah, I pass to Shane to take over the Q&A session.
Thank you so much, Max, for sharing with us what are cyclical industries and how do we trade or invest in cyclical sectors. All right. So if any questions asked our speaker, Max, you may write your questions in the Q&A box. All right. I've seen a couple of questions now. First question for Azhar Kamaruzaman. Beyond the Malaysian market, are there any global cyclical sectors or industries that you believe offer interesting opportunity or challenges in the current economic climate?
Yep, I think definitely. For example, like the consumer discretionary. I don't think someone talked about Padini. Padini is somewhat can debate lah whether you think Padini clothes are expensive or not. They are going. I just walk in. I feel like it's a bit of they're moving towards slight premium, kind of concept. But I think they're doing quite fine so far. If you look at overseas is more interesting for consumer discretionary because in the US or the other market, we have companies like LVMH, and also in Singapore, right next to us, we have, if you bought watches, then you will know that Hourglass is listed in Singapore. So what they do is they retail watches, and also Swatch, the manufacturer of Swatch, all these companies, they are consider what we call consumer discretionary, and is quite not accessible in Malaysia itself. Malaysia, we have Bonia, we have Padini, but those are more towards closer to consumer staple, in my opinion, right? They are closer to consumer staple. But global wise, looking at these companies like LVMH, and also Nintendo, the gaming company, right? So these are the companies that during the time now where you see lower spending, and Swatch, you see that they have a slump in terms of the China market consumption for their watches, which is a bad sign for the economy in China. But I would say that it's something cyclical and natural, right? Whenever the economy pick up, the demand for these consumer discretionary products, they will come back. So if you have the opportunity to look at some of the consumer discretionary products like luxury car is quite stiff market now. Why? Because a lot of EV, they are quite competitive as well. For example, like me SU7, that car is itself looking very good, and it's not priced at super premium like Porsche, right? So for luxury cars, probably a bit of risky, but for wearables, some wearables, so probably you can look into that sector globally. Yeah.
Thanks, Max. So the next question is by Has Ahmad. So how can investors identify potential investment opportunities during seasonality transition each year?
Okay, I think it all comes down to how hardworking you are looking at the market. And if you are busy with your working, right, of course you don't have the time to look at the market every day, then probably you can set whatever trading tool that you're using. For example, CPO price, you can set an alert, maybe around 4,000. You get an alert, hey, CPO prices is 4,000 now, probably look at Plantation. Or oil prices, if it drops below 70 per barrel, hey, is it time to look into the oil and gas sector because now it's not performing so well? Is there a chance for me to trade? Then try to figure out what caused the commodity prices or the index itself. What is the cost for it to go down? Okay, and then I think long ago, I have a session with Shane about how to leverage on news to define them as a long-term impact or short-term impact. So if there is a fight emerge, then oil price spiked by 3%. Do you think it's sustainable? Most likely no, because this is a market reaction. But if I tell you, Indonesia, they are going to ban exportation of certain grade of palm oil, then where do you think the demand will go to? Since we are the second largest, then this is a more sustainable kind of changes in nature. But it will more straightforward, it will be reflected into the commodity prices. That's why you can set an alert. But otherwise, I think you still have to be quite hardworking into looking into the market as well.
All right. Thanks, Max. So the next question is, how can individual investors like us assess and analyze economic data effectively, especially considering that there's so much volume of information available?
Yeah, I think true. I will agree with that because there are a lot of different platforms, a lot of different sources of information, right? You got NetPeg, then you got our data provider. If you are too busy to go and filter this kind of information, which I presume everyone does, is quite busy on that, including myself. So you can look at some of the reliable news, like Eugene mentioned here, DH, quite okay because they collect industry experts kind of view and then they post it there. For example, like MAA, Malaysia Automotive Association, they will have an annual prediction of how many cars we will sell. They call it TIV in Malaysia. So how many cars they will sell, then they will post into medias. Or alternatively, whatever trading platform that you are using now, they will have analysts to talk about the economy outlook. And not trying to promote them here, but I think a couple of them, they really go and talk about a particular sector. For example, if you're really interested into palm oil, one broker start with C, right? They have I think weekly or monthly commentary on the palm oil forecast and whatnot. So you don't have to do the homework yourself because the analysts, they already do the job for you. They already do the forecast. Not saying that you're going to be 100% accurate, but it is something that you, at least if you look at the report, oh, this is what happened for the past few weeks or past few days or whatnot that impacted the market, right? Sometimes they also give you some of the stock picks that they filter out, they deem the company is okay one, fundamentally okay, at least save you around 50, 60, 70% of your time going filter one by one of the companies. So the companies that are being featured by analysts, normally they have a filter. Companies that are consistently making losses, unless it's a super big company like Capital A, right? Funny companies, normally the analysts, they already filter out. So that reduces your time for going for research. Yeah.
All right. Thanks for sharing your perspective in this question. The next question is by Lim. So could you comment about plastic industry?
Okay, plastic, aluminium, cement.
Are they cyclical?
Okay, so let's start with plastic. Plastic in Malaysia, then we have Lotte Chemical. They are supplying the white polymer, okay, that can be melted, and then they have a mold. They melt it, and then they put it into the mold. Then it will come out to be our end product. Whatever plastic bottle, plastic container, then there are hot blown machine that can make into packaging film and whatnot. So the plastic industry in Malaysia is quite vibrant in itself. So what will impact the plastic industry? Number one is the plastic prices, raw material. So when the oil price is too high, then when they crack it down, they make it into polymer. The polymer prices is also high. So if plastic manufacturer is not able to transfer the cost to their clients, then they will get impacted, right? Because their cost is higher in that sense. So they might or might not get impacted. But if drags over a long time, oil price maintain over long term, they might have already settled down with their client. Hey, oil price has already maintained so high. My cost of buying polymer has already been so high. So can I transfer partial of the cost to you? So most of the cases in Malaysia, if you look at Tong Guan and Cytex, you will see that, okay, maybe they get impacted 1 or 2 quarters, but subsequently they are recovering from that issue. Another issue for plastic industry in Malaysia is the one of the costs is raw material. Second is the electricity. Electricity, ICPT, since the removal of ICPT, I think the factor already sunk into their earnings, so that one is still okay. So plastic industry, if you want to ask, is it cyclical in nature? Yes, it's because of the raw material input for them. And second one, aluminium. Aluminium, I think we have a couple of companies in Malaysia. One is coming for listing, Winstar. The larger player in Malaysia, we have the largest player, we have Press Metal. Two other companies that are smaller in scale, we have LB Aluminium, and we also have the PA Resources. So LB Aluminium, they are doing the more upstream products, and LB and PA, they are doing more, I would say downstream, are more related to downstream products because they're doing the extrusion part. So for example, PA Resources, they have a very, very big solar client. And when we talk about solar client, they need solar panel. They need the solar panel, they need the aluminum frame. So they're doing extrusion, they get a very significant contract from them. But aluminum, like steel, is not as volatile as steel, but it's still being consumed a lot in industrial and also semiconductor as well, right? So it's also cyclical in nature in terms of the demand and supply and also pricing for these aluminum companies, right, in Malaysia. So Press Metal, because they control upstream, probably impact will not be so significant. But the downstream player, yes, you might see one or two quarters being impacted greatly. But speaking of aluminium wise, I think there are some policy changes if you look at US against Mexico. There are some restriction on them on Mexico buying aluminum from China. So there might be a shift towards the demand in Malaysia, especially for the solar and also semiconductor related aluminum companies, right? And cement industry, when we talk about construction, one major cost is definitely labor. Another one is the raw material, cement, aluminum framework, then and also financing costs, and last, raw material. Raw material, then we have concrete, cement, steel, wood. Steel prices, I think, quite stable, normalized down. So construction companies, they are manageable. But cement prices, very interestingly, is still maintaining at a certain level. It's not coming down because cement prices has been doing quite badly for many, many years already. Then now there's a consolidation of two major cement companies in Malaysia. So one company itself, they command around 70% to 75% market share in the whole Malaysia, one company itself. So cement prices, now they are not coming down. Cement companies is most likely going to continuously to perform for now, right? So that's the plastic, aluminum, and also cement industry.
Thanks for sharing your idea. The next question is from YZ. Hi Max, which cyclical subsector industry are you paying more attention to recently?
Hi, I'm actually looking into the semiconductor because our local semiconductor players, we have been down for some time, especially for the machine maker. So I think in 2025, probably Q2, Q3, my personal this is my personal prediction based on whatever data that I have. It's not a buy sell call. It's only my own opinion. I think probably from Q2 next year onwards, semiconductor sector for back end for Penang is going to do relatively better, right? That's one of the sector. Number two, aluminium. Aluminium, I know one of the companies in Malaysia, they are going to do quite well because their orders for aluminium generally has been increasing. Plus the factor I mentioned just now, the Mexico, US, and China factor. Or speaking of this core relationship, there's also one thing I would like to share, which is the China Plus One initiative, right? You see that a lot of US companies or a lot of global semiconductor companies, they start to look into Southeast Asia. In Vietnam, they have a very strong front end. Surprisingly, they have a very strong front end hub over there. And Malaysia, after KL20, one of the very big event in Malaysia talking about semiconductor, we are going to have another similar front end hub in not Penang side, but in KL Selangor side, right? So this is one of the sector I would look into. Then secondly, I'm also looking at the plantation sector because CPO prices is actually doing quite well now, around 3,008-ish. But if you look at the plantation sector as a whole, there are some lagged behind. Some of the companies that are not performing so well, but they're giving out very, very good dividend yields. Okay. Just recently, I think we have two oil palm companies just got listed. Both are very huge. MKH OP, MKH Oil Palm, and another one is the Johor Plantation. So both companies are very huge in nature, and surprisingly, Johor Plantation, maybe because of the support of Jacob, their performance is quite well. And palm oil price, generally speaking, as long as palm oil price above 3,005, most of the plantation companies in Malaysia will do very well, and they will give out quite generous dividend because they only need cost for replanting and whatnot. Yeah, so these are the three subsectors that I'm looking into. Oil and gas now, probably no for me at the moment, but plantation, yes.
All right. So the next question is by Xijia. What is your trading strategy for cyclical companies? Will you do dollars cost averaging?
Most likely no. Most likely no, because like I mentioned just now, sorry, DCA is more suitable towards company that you think they have potential over a super long term. And for cyclical companies, you require one of the things that I mentioned just now, strategies, you need timing. If you are doing DCA effectively, you're throwing away the factor, timing factor, which you might miss out very good chance to buy more and lower and to sell everything at the peak. Of course, you couldn't sell at the very peak, but at least you can sell at a very good profit, maybe 30-50% profit, right? But if you're doing DCA for the sake of dividend, then I would say that if you're looking into banking stock, it will be better. Yeah, maybe money. One of the things that he mentioned is that you do DCA when you're collecting, right? Then you sell everything at one off. If this is a bad, let's say this is a down cycle, remember economy cycle, and also the price for commodities. If this is a bad cycle for that particular cyclical sector, then you do DCA batch by batch to collect, then that one is okay. Yeah, that one is okay. But if you're going for extended period, anything more than 2 years for, okay, let's say 3 years, you're trying to hold for more than 3 years, unless the market is really bad, the holding period shouldn't be so long, right? Within these 3 years, you should able to identify a good time to exit already. So DCA, probably if you are buying towards the downturn, probably yes, but if you're holding over long term, no. I don't think that's a good idea.
So how long will you hold for cyclical company normally? Is it
really
based on
depends.
latest data?
Yeah, it really depends on whatever the performance is. For example, if I'm buying today, a week later, then the share price spike up. So I will try to assess whether the spike is sustainable. If it is not sustainable, then better run first. But this is, for example, I've been waiting for 6 months or 1 year. Then suddenly, okay, now the data for the consumption of the purchase of palm oil suddenly increased because of Indonesia side. They have a significant issue. They have a weather issue. Then they're going to see production slow down for another 3 months. Then I know that for at least for another 3 months, CPO prices is going to be good. Then I'm going to watch and hold and see how it will perform. So I don't have a fixed period, but if anything more than 2 years, then something wrong. Definitely something wrong in between. Whether the market is too bad or whatnot. So imagine if you buy in 2018, where CPO prices is very bad, then you come into phase of COVID-19, which CPO prices is also not performing, then it's a period of 3 years. That one is external factor, something you cannot control. Then bopian, like you mentioned, you probably need to do DCA and average down for that kind of situation. But on average basis, for me, I would see on the price performance and my personal initial forecast on the earnings. Let's say I expect the company to be double in terms of earnings for whenever the cycle comes back. Let's say CPO price from 2002 back to 2005 or 2008. I expect the earnings to be double. And when the share price already double and more, then I would sell it first. So again, it comes down to what kind of valuation initially you plan it for. Yeah.
Thanks, Max, for addressing the questions. Eugene Wong would like to ask you, would it be better to just hold a stock during up cycle while accumulating during downturn, especially if you have a long investment horizon?
Unless you are planning to be we talk about DCA factor just now. In my opinion, if you are buying, okay, again, it comes down to why are you buying that company? If you really like the company, you wish to be their top 30 shareholder, wish to be featured in their annual report, then yeah, probably one of the way to think of that is that you buy cheaper during the price is lower, right? And not selling. But to me, if you look at the share price chart for a lot of cyclical companies in Malaysia, there are only a few companies that are able to give you very long-term growth. Most of the companies, I would say around 70-80%, they are up, down, up, down, up, down, right? Because they are smaller scale. Larger scale, if you look at their, let's say, replanting or oil and gas, they are doing downstream, they're slowly expanding, then these are the companies that you would want to hold for longer. But if they are having the same, let's say I have 150 hectare for my planting. So every year I only taking care of the 150 hectare itself. And then at some point I do replanting, I don't have some expansion plan. I do not plan to go downstream or whatnot. Then it doesn't have something substantial in terms of growth. Then these are the companies that I wouldn't really go and hold on to them. But if you buy a cyclical company, today they're cyclical in nature, but they are very large scale, and they're telling you we are going to diversify into downstream and whatnot. Then these are some other cases, because whenever they venture downstream, then probably they have a more recurring income base. But still, when we're talking about cyclical company, most of the time we still trade on it. That's my personal take. Yeah.
Thanks, Max. So when it comes to cyclical investing, right, do you rely on indicator or any technical techniques to enter and exit based on the cyclical trend?
Yeah, thanks for the question. But unfortunately, I am a pure fundamentalist. Funny thing is, I used to start with technical analysis, but I lost a lot of money going through technical analysis. So I feel like it's not the thing for me. But it's a very good tool because you can see that I still look at technical chart, but I don't really use a lot of indicator. I just look at the volume. Whenever there's a very substantial volume, then probably it means something at the time, right? But generally speaking, I don't really use a technical indicator. But if you are combining technical and fundamental, good for you, because a lot of times you can see that, okay, let's say break MA 20, okay, the midterm trend is going to be weaker and whatnot. So yeah, sorry, but I couldn't really help you on this because I don't really use indicators.
Right. So when it comes to cyclical investing, right, are there any red flags that we need to be aware on? It could be, would they be based on cyclical factors that we'll discuss?
Yeah, I think over expansion during bull times. Again, for when we're talking about good things, we mention company. When we're talking about bad things, we don't mention the name. So over expansion or over optimism during the time, you better be careful with the company, right? So there are some samples in oil and gas sector. There are also some examples in the glove industry, right? During the glove mania, everyone talking, oh, I'm going to double my capacity. I'm going to triple my capacity. I'm not from glove industry. I'm going to start a glove business, right? So a lot of cases like this. So these are the red flags that whenever they say they're going to expand and the peak, it's probably it's quite a risky investment decision coming to talk about it, right? But if you look into some companies, green flag, they are buying other companies or they are buying asset during the market is bad. Okay, there are some cases in Malaysia. They are buying other companies, vessel. They are buying some companies asset during the downturn. So these are the green flag. They know what they are doing and they have significant experience in this kind of situation. And also red flag during the peak. Okay, they are acquiring companies or acquiring asset with cash. If they're acquiring with shares, then never mind. It's minimal dilution because my share price is high. then my dilution is not so bad because I didn't really pay with cash. I still have cash if the sector downturn comes, right? That one I think okay, manageable. They at least they know how to play with the corporate. But biggest red flag to me, over expansion during the market boom. That one is really need to be careful with that. Yeah, I saw some names mentioned, but it's not from me. If you know the history, then yeah, you know.
All right. Thank you so much. So the next question is there any tips on how do we detect a turnaround company?
Oh, I think again, this one is quite similar to how do we identify this kind of companies. Yeah, I think it's quite similar. And this is dependent on how hardworking you are reading on the announcement. Because nowadays, everyone got access to the information. But funny thing is, not everyone go to read the information. There are Bursa announcement every day. A lot of companies, they make announcement. Maybe they acquire company A. Maybe they don't have a good investor relation to publish the news out. So I give you an example. If you are really hardworking, right, in terms of starting the companies, and you go through the Bursa announcement one by one, you would have noticed that SMRT back then last year, I think is a spectacular company, right? SMRT, they're disposing their loss-making subsidiary. So the education business, and they focus on IoT business. And the IoT business is not something typical, oh, I sell IoT product. No, it's something more special. Okay, imagine this. 5 years ago, TNB, they built a substation, right? They trying to track the metering, or they track the electricity consumption, right? That one is one part of their substation. 3 years, they built another one. Another 1 year, they built another one. Maybe 10 years ago, they built another one. So imagine the technology changes in between, right? Maybe this one use a newer technology, that one use an older technology. SMRT is an expert in terms of retrofitting. Retrofitting meaning that they are able to take, okay, you're older in terms of technology, never mind. I can still take whatever raw data you have, I retrofit, and then I feed back to TNB together with a new one, right? This is their specialty. That's why their IoT is doing so well. They are also venturing into Indonesia. So yeah, fantastic. They're doing quite well. I will believe they will continue to do well. But to address your question is depending on how much time you have really to commit into reading this kind of announcement and whatnot. Because if you're not reading from the original source, which is announcement, you're reading from news, right? So you're on the level ground with everyone else because everyone would have read the news, but not everyone is so hardworking to go through the announcement one by one.
All right. Thank you so much, Max, for doing this segment and also Q&A session with us. So this is all the time we have for question and answer. So I want to thank all of you here for staying tuned until this end of this Q&A session. So ladies and gentlemen, you just heard from Mr. Max Tan, who is the founder of One to Invest. Thank you so much, Max.